Yo, what's going on, everyone? Welcome back to another video. Don't know if my mic is going to be that quiet this time. I guess we'll find out. But I'm coming to make this video to talk about how to determine the direction of the market. How can we find indications that the market's going to move a certain way, and how it can benefit our entries, and how we can make more money while risking less, lowering our risk to win more. So let's get into that. Let's talk about just a few things I look for in the market. I always talk about it because I always use it, and that is going to be fair value gaps. Very, very common, easy to find, and they work. Not 100% of the time, of course, but they do work. And it could definitely help you to determine where the market is going. So first, we're going to take a look here on the chart. Already graphed one out. I'm just getting ready for tomorrow. Already charted it. Tomorrow the market opens. We'll see if it's choppy. We're going to be live on Kick like we always are. The link will be in the description, 9:15 p.m. Eastern Standard Time. So a fair value gap is basically you're looking for 3 or more candles going in the same direction. So here we could find 1, 2, 3, 4, 5, 6. I can't count, but it's more than 3. More than 3 candles going to the downside, all in a row. And basically what you're looking for is the gap in between the wick from the top and the wick from the bottom. So you could tell right here, fair value gap was created when this wick right here at the top left a gap in between this wick here at the bottom. Again, there's another fair value gap here. Bottom of this wick to the top of this wick, fair value gap, and then another fair value gap up here. Again, the bottom of this wick and the top of this wick creates that little gap in between. And what's an example? What's not a fair value gap? This right here is not a fair value gap. Why is it not a fair value gap? Because the bottom of this candle does not create a gap with the top of this other candle. You see, there's no gap in the market. All right, so that's what makes a fair value gap. And what are we looking? What are we expecting price to do after it comes up to a fair value gap? So you're basically trying to determine what direction, what's like the bias on the fair value gap. And it's going to be bearish, and that's because, again, all of these candles are going to the downside. So you're looking for price to retrace, come back up, and then touch this point and pivot back down, pivot to the downside. And that's exactly what happened here. And the reason why I have my rectangles, I have lines in my rectangle, is because I like to enter off the 50% of the fair value gaps. It gives you just a little bit of a better entry, and it reduces the chance for fake outs. So here, like, if I was to go short on this 50% touch, stop loss slightly above the fair value gap, and then take profit probably down at the support level. That would be basically almost a 1-to-7. So that's a good trade. It's a very good trade. A 7 risk to reward trade. That's good. That's good. And basically, if we were to move our stop, if we were to enter off, the touch right there, and just off the bottom of the fair value gap, and have our stop loss still slightly above, your risk to reward goes down. And why would you want to, that's like 1.4 RR that you're losing there. So why not just take advantage and catch the full move? And again, also, if I went back to this, do the same thing, stops above, your take profit also gets smaller, and your risk to reward ratio is not as good as it was off entering the 50%. So I hope maybe, you guys can use that. And then I also use support a lot. Support and resistance, it's very good to trade with, very good confluence. You could see we have support down here, and it was kind of created off basically like a fair value gap, kind of right here. you could see like the gap in between this candle and that candle. So that kind of created support here. And you could see we had multiple touches in this area before starting to move back up, touching the fair value gap, and then coming back down. So what I would have done on the support, again, would have waited for this to play out. I would have entered my shorts up here and waited for price to come back down to support. And this level is kind of tricky right there. That candle is very tricky just because of the volume that came and spiked down through the support. There's lots of volume here. It could have been some news, not quite sure. But it would have been a little scary to enter on a long position right here from the support. But yeah, it's great to keep in mind. Very important. Again, I have just a level, some support down here, and it's just when multiple touches occur in the same zone. So I'd say like 3 touches makes it valid. And in this instance, it's 1, 2, 3, 4, 5, 6, 7 touches. So I'd say it's pretty valid for me. Down here, why do I have this area marked? It's just because it's basically like the lows that we're going to use coming into next week, or coming into this week, so tomorrow. These are the lows that I'm going to be looking at, and it's also acted kind of as support here. So it's like we've had like 1 touch, 2 touch, 3 touch, 4 touch. So I'm just keeping my eye on this level to see if we break it and, you know, sell off, or if we can come down and bounce and go back up. So another thing that I look for is gaps in the market. The market gaps, you know, when you come back off a weekend the next day, you know, whenever that kind of stuff happens. And then we have the gap here. And if I was to delete the rectangle, you could see there's just a gap right here in the market. There's no candle that, you know, extends up to that zone. And again, keep this in mind, gaps love to be filled. They love to be filled. Not 100% of the time they get filled, but they love to be filled. And in this case, it did get filled. You can see we pushed up and then came down to fill the gap, and now the gap has been filled. So let's see if we can come down to the support level. Then it'd be a little bit interesting. I had somebody comment on the last video asking about how to calculate ticks on futures. So that's a great question. TradingView makes it very easy. You take out your little measuring tool right here, and let's say you want to find out how many ticks it is from the 50% of this support zone to the 50% of the fair value gap. Let's see. That is 193 ticks. And what would that be in dollar value? So if you're trading the NQ micros, the minis with one contract represents $5 per tick. So if we were just to whip out the good old calculator, $5 times 193. Sorry, that was not 193. 5 times 193 is $965. That's what you would make if you caught a long from this support to this fair value gap per contract. Of course, if you were in for 4 contracts, you would have made $3,800. So that's how you calculate ticks. And yeah, it's very easy. This is the ticks right here. If you're trading on TradingView as well, it should tell you what the tick value is once you're about to place an order. So it'll let you know. So I hope that video helped on, you know, how to maybe help find direction in the market. And the 2 indicators that I use is the 14 EMA and the VWAP. That is it. That's all I use as far as indicators. So I hope this video did help, you know, determine and calculate, you know, tick value, and how to maybe find and identify which way the market is going to move from certain zones and levels. And I hope to see you guys in the live tomorrow. Again, we're live on Kick every day, Monday through Friday at 9:15 p.m. Eastern Standard Time. The schedule will change probably next week, but we'll try and I'll be live every day. I'll make that happen. And we're only like 17 subscribers away from being able to live stream on YouTube. So if we can get to 50 subs, that'd be great. I'd prefer to do it here on YouTube, but you know, stuff happens. So I hope this video did help, and have a good one.